All right, it's happening. We're doing this. It is May 4th, 2022, and this is hopefully the video load that takes 30,000 to a million. I'm going to take you through the account and share with you some survival strategies, at least my own survival strategy. I've been watching a lot of videos lately, obviously, like I always do, on finance and things like that, and a lot of people are making videos on how to survive like inflation and all this. So I'm just gonna give you my perspective. It's probably less opinionated than you might think. But first, I'm gonna take you through the account. So this is it. Had a good day today. Right after the Fed meeting, they decided. I think the big takeaway from the news channels was that Jay Powell took away the possibility of hiking by 75.75%, or what is it, 75 basis points. So instead, they only went up 0.5%, and he kind of said that they're gonna only be doing 0.5% increments. So I think the market kind of had a little bit of a relief rally, and you can see it reflected in my account. But not only in my account, let's go to the SPY real quick, SPY, which tracks the S&P 500 index, and you can see how it was negative at one point, negative almost 0.5%, negative 0.39%, and then boom, all the way up to plus 3%. So that's a pretty big day. So my account had similar exclamation. It was minus 1.34, and then boom, all the way up to plus 4.5, and that's kind of where it ended up at the end. So I'm going to review the account really quickly. All the positions that are listed over here on the right. So if you want to know the exact positions, all you got to do is just pause the video at any moment and try to figure it out. So the options are over here on the right. The green number means the daily change in percentage, and the white number is just the daily change in dollar amounts. All the information is displayed here on the screen, so just pause and look through it if you wish. I have 530 shares of Apple now. These are the equities. I picked up some wow, that's a Freudian slip. Some more realty income, and some Main, MAIN, which are two of my core positions along with Apple, and I don't want to really sell them. I will sell a little bit of Apple if it spikes up, but I don't think I'll be selling O or Main for quite some time, if ever. Everything else is up for grabs and up for sale if the right price comes. If you want to look at the account tab, I will show you. This is the account tab. Currently navigating $268,435 change. My margin used is almost $80,000, which represents 29.61% of the total market value. Stocks are organized here by total return. Obviously, the longest held positions are the biggest gainers. Everything else is in red. But that's not too strange for newer positions. This is ordered by equity. Apple is my biggest holding at the moment. Goldman Sachs is the second biggest holding, sitting at $75,000, almost $76,000, after Apple having $87,000, almost $88,000. The reason why Goldman Sachs is so big is because I was forced. My arm was twisted into buying 200 shares of Goldman Sachs because of option activities. And hopefully, I get to sell Goldman Sachs for a slight profit at $325 if it ever reaches that price. Let's go to Goldman Sachs and take a look. Goldman Sachs is sitting at 323.25. My average cost is 324.97, and I want to sell it at 325. How am I doing this? Through option activities. You can see the option activity right here. Now, let's see some performance. I'm actually, again, because of today, I'm now beating the market again. So I'm really excited about that. You can see over the 1 week. Actually, let's look at the SPY first, and then I'll come back to my account and show you the performances. 1 week performance is 1.38 for the SPY, and then minus 6.3, minus 4.7, and plus 257 for the 1 year. If we go to my account, you'll see that for the 1 week, I'm up 9.56, down 3.86 only for the 1 month. I'm actually up on a 3 month by 2.65%, and then on the year, I'm destroying 17.46%. So I'm extremely happy, and all of this is considering I have a lot of Chinese positions, and I've lost a ton of money on the Chinese position. So the rest of my account has managed to outperform and counterbalance the large amount of losses that I've experienced dabbling in the Chinese market. And I have quite a big positions in the Chinese market, actually. Even currently, I have a bunch of leaps, which total in about $15,000. And then you can see here, if we sort by equity, you can see I have 23,000 VIP shop. I actually sold 200 shares today, just to try to shore up some of my losses and put some on the books for tax purposes later this year. And then I have sold also 300 shares of JD.com already when it popped a little bit. But I still have $13,000 in it. So that's quite a bit. I mean, that's still about $50,000 in Chinese stocks. And it was a lot more. But I still have a big bet on Chinese stocks. You can see all the leaps here. I have 3 leaps, $140 calls that are expiring in 2024. I have a bunch of VIP shop kind of leaps, and then I have JD. I have 4 calls, $75 calls expiring next January, and then I have more bubble calls leaps expiring 2024. A 110 here, and then a long shot 235 call. 2 $52.5 calls. Those are actually profitable. I sold 2 of them already. And then that's just PayPal leaps. Hopefully they pay off. I'm willing to sell those as well before they expire. But you can see the JD calls are actually profitable here. I'm up 55% on them, translating into $1,700. Okay, survival strategy. Well, I mean, my personal survival strategy is just try not to guess where the price of anything is going to be. I'm trying to trade things that I like. And my, I think, secret sauce here is that I'm not hell-bent on trying to figure out where these valuations should be. I'm just kind of acting like, for example, in the Goldman Sachs case, I like the company, and so I'm willing to hold it for a considerable amount of time, but I'm really not trying to guess the price. So I'm just selling options on the below the price or above the price a little bit, depending on recent movement, and I'm just trying to collect premium from it. I'm not really like buying calls or buying puts. I'm doing the opposite, right? I'm betting on the fact that I don't know where the exact entry point and exit point is. So that's my advantage. Like, who am I to say, like, what the market's going to do tomorrow, or what kind of variables are going to come out, and or how much is priced in and out of the market. So I'm trying basically my hardest not to guess what's going to happen for the majority, of my account here, especially on the short term. But I do get to collect premium doing that, and when the environment changes, my strategy or my thoughts are that I should be doing what I set out to do, which is supposed to take me through all kinds of environments. Like, I'm willing to enter an overpriced stock and exit an overpriced stock, and I'm also willing to enter an underpriced stock and an exit an underpriced stock, just because my options happen to be around that area. Like, because I just don't know what the right price is going to be, and I'm just trying my hardest not to guess. Okay, so that's kind of like what I'm trying to do. And if it's an inflation environment, my guess is that the price of everything is going to go up eventually. Like, there is a scenario where stock prices can come down temporarily, from, they can diverge from inflation basically. Like, stock prices come down, consumer goods can go up, just kind of like a little bit of the opposite of what was happening perhaps in the teens, 2000 and teens. However, if there's really that much money slushing around, then the stock market will catch a bit at some point. I heard on the news today that there's like record holding of cash in people's accounts. And I mean, that thing is burning, right? That cash is just burning up in their account. People are eager, money managers are eager to get rid of that cash and invest in something that won't depreciate. It's not going to guarantee depreciation, right? And the only place that the money can go really is stocks. I mean, it can go in real estate or stocks, but they're both kind of tied together. They don't really want to put it in bonds because bonds are yields are on an upward trend now. Bonds are actually in a bear market, so they're looking for other things that will battle the inflationary, environment that we've set out to be in for the foreseeable future. So inevitably, that money is gonna end up either in the pocketbooks of companies or in their stock prices or real estate, which in turn is gonna move the money around and gonna end up in companies' hands eventually. And so, just there's no place to go but the market, and it's just a matter of time, I think, until the money kind of returns, and we see all-time highs again, even in the face of rising rates. Now, there could be, of course, some kind of crash, something unforeseen, some market deficiency that can happen in the future, some technical, roadblock or some malfunctioning in the mechanics of the market, and that could send, the stock market crashing. But for the most part, I think that the system is set up so the market is kind of like almost guaranteed to go up against the U.S. currency or against any currency really, over the long term. So that's kind of my thoughts on the market overall and the overall direction. I'm not trying to guess, what the market's going to do next week, even though I'm collecting premium on that and I'm very active in the weekly market. But I'm also not trying to guess months or even a couple years. I know that's kind of a cliche. Everybody says, "Oh, you're a long-term investor now," etc. But I really am trying to keep companies like Apple for the long term. I mean, let me see. I don't know if it says when I've actually entered this position, but I've had Apple ever since I started this channel, which was like in 2018. So that's 4 years ago. Not a millionaire yet, at least in this account here, right? So I am trying to beat some goals that I've set out. I thought I would actually be a lot higher by now, but um, such is life, right? I'm not. Apple's been outperforming me actually. So good thing that my account has got a good chunk of Apple in it. But even if Apple corrects, I think eventually it doesn't show any signs of slowing. So I'm pretty happy to have it in my account. If you want to see the all-time chart, this is somewhere where I start putting money into the account in 2018, maybe August. Right here. That's why it looks so flat, because the account just had a few $100 in it and I didn't really do much with it for all this time. And then I started putting some money in, in August. So I guess the total amount of money that's been put into the account is this, $72,000. And now it's at 189 almost. But the performance is not that bad, as it seems. It's not just a 2.5x. It's a lot better than that, because this was only a few $1,000s here, and then $30,000 here, and maybe 40,000, 50,000, 60,000, maybe 70,000 here. And since 2020, I haven't actually added any money into the account, like zero. So it's like time weighted performance, right? That's why it's actually, the performance is better than it seems, which I like, and it's gonna be a little bit more realistic, going forward. Probably not gonna be able to put much money into the account, if at all, going forward. So, just recently bought a house, so thank you if you're saying congratulations. um, Also, I'm now married, so I might have a kid soon. Who knows? So it's going to be a lot of expenses, and I can't really afford to put more money in here. So this money will have to do. This money will have to carry me all the way to the million on the account, and I'm going to try my hardest to do that. I think I can do it. Um, in the next 4 years, if I keep up the performance and maybe it'll do a little bit better, I should actually be able to hit that goal. So hopefully it happens. I'd be very excited if it does, and definitely have to throw a party somewhere. All right. Well, I think that's it for now. Just wanted to update everybody and just let you know that I'm just gonna stay strong and do what I do best through this choppy, uncertain environment. Let me know if you were doing anything different based on the current, macroeconomic winds and domestic inflation and things like that. So I'd be curious to hear of what you're doing differently, if anything, to what you normally do with your accounts. All right. So let me know below. Okay. Peace out.